central banks to hike rates to keep inflation in check, as expected last week. The standing deposit facility rate and the standing lending facility rate were raised by 50 basis points each to 5.5% and 6.5% respectively. Also last week, India gave Sri Lanka a financial lifeline, giving Colombo some breathing space to settle a maturing $500 million sovereign debt. Sri Lanka has committed to repaying the entire $4 billion it owes to investors in the rest of 2022. Let's get more on this with Ajith Nivard-Cabral, Governor of the Central Bank of Sri Lanka. He joins us live from Colombo. Governor, thank you very much, sir, for your time this morning. First of all, what is the extent of the problem Sri Lanka faces? And bring us up to speed with a total foreign debt outstanding this year, because I've seen a figure of 6.9 billion US. Is that correct?
Yes, Sri, that's correct. Out of the 6.9 billion, most of these loans are Sri Lankan-based loans, which we have already negotiated for rollover, as well as certain multilateral debts, which are also being funded with new receipts that are coming in. So we don't really see too much of a risk there. The only area that we do see some kind of a risk as well as concern is the international sovereign bonds, out of which we need to pay $1.5 billion back this year. And we have already paid back $500 million, and we have $1 more billion to be paid. Now, the overall situation is like this. We have approximately a further $12.5 billion of debt in ISPs to be repaid over the next 7 years. And in that context, we have already made arrangements to pay back the next loan, and we are funding that with alternative sources. And our strategy has been, since it is difficult to go to the markets at this stage, we have found alternative sources of new financing, which has assisted to repay the debt of the ISPs, which means that in the last 2.5 years, we have reduced our ISP exposure by 17%. And by July here, we would reduce it to 23%. So we are
Governor, you're referring to the credit lines and the currency swaps that you negotiated with India and other countries. How far do they go in terms of paying off the outstanding debt, especially on the external front? And is that really a sustainable solution?
Absolutely, because if you don't have the ability to go to the markets right now, and the prices are high, and there is a dearth of funds out there, then you got to find alternative sources, which is actually a kind of a new change in the mix of our debt, and which is quite sustainable. So what we have done is
why not restructure the debt, and why not go to the IMF for a relief package?
No, please let me finish, Sri, because what I'm going to say, we have made sure that these are being financed with new sources of finance, which allows us to settle the ISP loans. We get the breathing space, as you quite rightly mentioned, which allows us thereafter to take new steps to increase our earnings, as well as have new non-debt inflows. We are monetizing certain assets. And I think through that strategy, we will be able to have a lot more sustainable debt portfolio. And that's what we are aiming for. And already we have reduced the ISP holdings by 17%. And we will we'll reduce it by 23% by the end of July. And then we'll be a lot more sustainable because our economy also would have grown. So that is the strategy that we are pursuing. And in that period, maybe the next 2 to 3 years, we will have that space.
Understood. Why not approach the IMF for a relief package?
Well, we don't need relief if we have an alternative strategy. That's what it's all about. We have funded the maturing ISPs without any change whatsoever, without causing any pain to our creditors. And we don't want to cause any pain to the creditors, because I don't think it's necessary to do that. And if we are successful in finding G2G as well as central bank to central bank solutions in the short term, and we have a strategy to change that into something a lot more sustainable in the next 1 year or two.
But with all due respect, Governor, there is nothing short of an economic crisis in Sri Lanka at the moment. If you go out into the streets, there are food shortages, there are medicine shortages, there are fuel shortages. Don't you need an economic lifeline?
We don't have any fuel shortage. If you come to Sri Lanka, you can see there isn't a single queue for oil. There isn't any shortage of medicines. We have imported $870 million worth of medicines last year, when our normal imports of medicines is only about $550 million. And I must say that notwithstanding some of these stories, we may have a few shortages with regard to gas, because that was entirely different, because that was due to certain explosions taking place in the gas cylinders. But in the markets, we find almost every item that is necessary to be available. So just one or two items have been highlighted, but that doesn't mean that Sri Lanka hasn't had any shortage. We have all the foodstuffs available, and I don't think there is any reason to say anything much on that. But at the same time, you would find that the sentiment, even locally, is very positive. Look at the stock exchange. You're just showing that in the screen. You would see that it has been on the up, because that shows that the local investors are bullish about the way the economy is moving forward. And we would have about 5% growth this year, on top of a growth of 4% growth last year, which means that there is a sustainable economy being built up. Now, in that context, we would have certain areas where we have a few difficulties, mainly because of the downgrades. I must say some rather sensitive downgrades by the rating agencies, which put a little pressure, an additional pressure on the banking sector. But now that is also being sorted out with new inflows coming in through the swaps as well as the other G2G arrangements.
Ah, yes. Governor, this is Martin. Let me quickly jump in with a question. I'm glad you brought it up as well, because all the major ratings agencies have pushed Sri Lanka's sovereign debt rating even deeper into junk. You mentioned swap, so let's talk about that. And talk to us about the fragility or not of the central bank's finances here in terms of your reserves. The good news is they have just swelled, nearly doubled to just over $3.1 billion by as at the end of 2021. The not so good, maybe bad news is half of that is attributable to $1.5 billion in a swap line from China. And you've been not very clear about how much of this is actually usable as dollar reserves. Can you clarify that for us, that $1.5 billion swap line from China?
The China swap line is usable. The Indian swap line is usable. But we are very keen that we maintain a certain nuclear reserve as well, because that's very important for us to project the image of stability. So my intention and that of the Monetary Board is to ensure that we keep a certain level of reserves which projects the stability objective. But at the same time, we want to ensure that there is enough inflows that would be sufficient for us to pay for the new areas of debt settlement as well as other essentials. So overall, if you look at the policy statement that we issued a few days ago, you would find that we have been conscious that we have to ensure that the essentials are met with the dollar inflows that we have, and that's improving now because exports have increased to the highest levels. We have had some difficulties with the remittances, and we are fixing that with new measures that we're taking.
Okay.
So we feel that going into the year 2022, we would have a lot more comfortable projection, particularly because we have seen a strong bounce back in the tourism sector as well. Now, tourism is one of our mainstays.
Indeed. Yeah, it's a beautiful country. I mean, I've been there several times. But let me push you a little bit harder on this $1.5 billion swap line from China. You say it's usable as dollar reserves. Are there restrictions on usage, though? Because I think that is what your commercial banks are most concerned about, and that's why they're worried it may not be fully usable as dollar reserves.
You see, it all depends what it's usable for. Sometimes people say it is not usable for one thing, but it's usable for another. Now, if we can use it for the imports of Chinese goods, that's a very effective way of reducing our total exposure to the foreign exchange needs that we have. But overall, whatever the monies are that we're having, we are not using it from this pocket or the other pocket. We do have the reserves in one bunch, And we can use it for investment purposes, we can use it for the repayment of loans, we can use it for imports. So that's how reserve management is really done. So in this instance as well, as far as the Chinese swap is concerned and the Indian swap as well as the other swaps that we are negotiating now, we will have certain areas where we would give priority to, but at the same time, we would be able to use it at any time whenever we need those things to be drawn on. So that's the way that we would be using the swaps. And we are confident and comfortable about using the Chinese as well in order to ensure that our external sector is much better balanced.
Governor, can you confirm whether you are negotiating swap lines with Qatar and Oman? And if so, how sizable could those swap lines potentially be?
Right now, the swap discussions are at various stages of development as well as fruition. I'm afraid I won't be able to give you an exact answer to that as to what exactly are the amounts as well as the timing of those. But I can tell you that we have been in touch with several Middle Eastern banks, and the responses have been quite favorable, and we are pursuing those lines as well. So in the meantime, we have another area that we have worked on, that is with India, an Indian credit line of $500 million for oil and another credit line of 1,000 million for other essential goods from India and to purchase items from India. So those are all going to help us in our external account. As you know, in the external account, there are so many different factors. And if we can have funds coming in for specific areas from specific alternative sources of financing, that gives us the comfort.
Yes. Governor, two questions from me, if I may. How high would you characterise the default risk as it applies to Sri Lanka, and how exposed is Sri Lanka on the external side to the Fed tightening cycle, a higher rates environment, a higher dollar environment, and could outflows further aggravate the situation for Sri Lanka?
I want to give a clear indication as well as a commitment that we will not default. Sri Lanka has had an impeccable record of debt repayments over the last 73 years. Even when we had various problems like terrorism as well as insurrections, every single debt was settled. Even on the day that the central bank was bombed in 1996, the debt was repaid on that exact day. So I would want to say that we are highly committed towards settling our debt, and we would continue with that policy. With regard to the Fed, what really has happened is over the last few months as well as maybe perhaps a year, we have seen the amount of our overall exposure to outside investments coming in from the US as well as some international investors has declined. And as a result, the exposure that we have right now is mainly of seriously committed investors to us, and we believe that they would continue. We think that as a result of Fed increasing rates, there may be certain repercussions that we would have, but as far as investment is concerned, the risk of any change as threat will be minimal, mainly because Sri Lanka is not having too many investments already at the moment from those sources.
Okay, Governor, I want to ask you two quick questions. One is back to the issue of reserves. You're at just over $3 billion. It's enough to cover about 2 months of imports. Are you comfortable with that level, or how high would you like that buffer to go? One. Two, late last year you sold literally half of the country's gold reserves. Are you intending to sell more? Do you need to sell more to make sure you have enough dollars?
Well, that's a good question. I would prefer to have a lot more reserves, and we would be amassing reserves as we go on. As you know, we have inherited a difficult time, at a difficult time, where we have the tensions of COVID as well as reductions in the growth levels of many countries, lockdowns and so on. So naturally, there has been some kind of pressures, but I believe as we go along, we will be able to develop on our reserves and would be able to ensure that we have much greater reserves. Going back to gold, if you remember, I was the governor way back in 2010, 2009 period when Sri Lanka was at war. And there was a time, due to the pressures that we did encounter, Sri Lanka's gold had dropped down to $92 million only by the end of 2010. But by end of 2014, when I left as governor, we had made that to $892 million of gold. So gold by itself is part of a reserve commodity or reserve asset, and we consider it that way. So I think we don't need to give too much of a concern or attention when gold reserves drop from certain levels that we have. But that would mean that we are more concerned about liquidity, and we have made sure that the reserve quantum that we have is having a higher degree of liquidity than otherwise. So I think it's a decision for reserve management as well as a decision based on the level of liquidity that we need to maintain. But I think when we go into the future, when our reserves improve further, there is a great possibility that we would increase the gold holdings. But right now, we're quite comfortable having the mix that we have,
yes,
and we would go on those lines, Martin.
Governor, can you give us your sense of just how acute the dollar scarcity situation is in Sri Lanka, and can you give us your best outlook for the Sri Lankan currency, for the rupee?
One of the reasons for the dollar scarcity is that several international banks had reduced their exposures to Sri Lanka based on the ratings downgrades that we had. Now that's unfortunate, because in the light of our serious commitment that we would be paying our debts, we did have those downgrades, and I think the rating agencies were quite insensitive in their work at that time. So having said that, we do have a difficulty with regard to those kinds of statements, which has warranted cutting back of certain exposures, and that has put some temporary setbacks as far as the liquidity is concerned. But we are rebuilding that, and the tourism receipts that we are having now in the range of about $150 to $200 million per month, I'm sure would be very helpful in increasing the reserve levels. We are also taking many steps to ensure that the remittances income is also increasing, which would again mean that we would be able to have a greater amount of liquidity in the market. And I think in the next 2 to 3 months, we'll see an appreciable change in the way Sri Lanka would be able to handle its imports as well as exports. And I think by that time, there would be a greater stability,
yes,
being portrayed across the international spectrum.
Governor, thank you for a very frank discussion. We really appreciate your time, sir, as always.
Thank you.
Ajith Nivard Cabral there, Governor of the Central Bank of Sri Lanka. That's it for us for this edition of Squawk Box. I'm Sri Jagaraja with Martin Soon. Do keep it here on the network.